Hi, it's David here with Futures Trading. I made a video on yesterday. We had like 128, now we're at 133. So our community is growing, people. I'm so glad that you guys are, of course, joining us. And then I'm glad for my fellow professionals here that's liking the information. We're definitely trying to build a community that care about others. And so you're here by fate. I did not buy any views, likes, subscribers, comments of any sort. So there's no deceptive behavior here. And of course, I don't want to entice you to become a trader because you can end up in financial ruin. And I believe that that could be the worst thing for you. Absolutely. So, and the other second thing that I think could be worse for you is you being here and me taking your time away because time is a allotted portion at your disposal suited for a purpose. And I don't want to take your time and tell you stuff that you cannot see on the chart. I can't do that. So I don't want to waste your time because I don't like wasting mine. So I want to give you some information that you can take away that's condensed and digestible. All right. So I'm glad you're here. We're celebrating the fact that you're here. So happy that you joined us. All right. Really important that you know that you are here by faith. Someone cared enough to hit the like button. And so we care about you. And so we're glad that you're on board. And if you don't mind, just follow suit. And thank you so much for all the participation that I've been getting here recently. I want to answer a question that I had got from I don't know if you're a subscriber, and if you're just stopping by to view the material, I'm glad you did that. But Ken, you asked me a question, and I don't want it to get lost in translation. I tried to respond, I did, but I don't want it to get lost in translation. I've done this many times before. People ask me questions, and I'll make a video so I can show them what it is. And so if you don't believe me, go back into the trading guide and you'll see where I try to let someone know where to put their stops. And so I've done actually several of them where I specifically outline what it is that they wanted to know. And so there's a community. We try to care about each other. And so hopefully you'll definitely interpret this as me trying to care about you, trying to let you know that this is what I want for you. I want the best for you. And so please understand this because you made your question public. I'm sure that you won't be ashamed if I address your question publicly. At least I hope you won't. And do not take it that way. But Ken, right in this video, you asked me a question, and I tried to type and answer it, but I don't know if I'm clear enough for you. I know when we're text typing, it can get lost in translation. The intonation of the voice, and of course, someone's disposition mentally can be interpreted by what you may see apparent in their visible, representation of them talking with you. But because we're not face to face, clearly we're going to have to do it this way, and hopefully you can tell that I am trying to satisfy your question, and so much so that here's my effort to do so. And so ICT fair value gap, formerly known as propulsion gaps, are often followed by aggressive moves in that direction and do not trade back into the fair value gap. Do you have any of your methods forecasting fair value gaps or propulsion gaps? All right. So forecasting. Kind of in some degree alluding to where it could go, to some degree. All right, so what I want you to do, let's take a look at just a tweet and then we're going to dive into some of that. So I put this out on yesterday and we're going to talk about gaps. I know this is kind of like not gaps, but I want to let you know forecasting and how that works for me. And now I can't tell you specifically how I'm able to get these targets, these levels. I can't tell you that, but I want you to see that this is not it's not complicated. It's actually simple. And I'm going to address your gap information. I'm going to address that. But I put this out yesterday at 7:13 a.m. There's the levels, and again, this is the range. And I didn't want them closing beneath this level. They managed to do it, but then they came right back today, and hopefully today they'll stay above that 160.26, and they'll just keep right on going. So in the video I shot yesterday's video, all right, the one that says don't quit, if you felt like quitting trading, don't. They were coming off this high very sharply. And so they managed to run away from it. And of course, the video was over and they managed to hit this target. They're back up there today. They actually finished it up there today, kind of found support right at this price level here. And there's our ranges. You can pick them up for absolutely free. Yeah, I can give them to you for absolutely nothing. And so when it comes to the information that I'm disclosing, I'm for one, I'm trying to give you actual several ways of looking at the market. These are static price levels. They're still in this buy zone, even though they punched through it. That's bad because they're supposed to be going to targets, and the target is the 55 or the 550 in the essence of the daily. They haven't hit the trend distance, and we projected this distance when we got our trend. Now, I've been calling this market all the way down. If you want to go back and take a look at videos, and I even gave upside targets from down here when it pushed down. I gave upside targets. I stopped giving short side projections. and I started giving upside targets. I don't do any kind of gaps. And I even left the tip on yesterday that often when they do failed trend distances, they usually come back and fill those distance that they failed at. They usually come back and fill those. And so in the weekly projection, there's a weekly projection that I gave into I forget what that section is called, but I've actually been saying that I believe that we can get up to the 18,500. So 18.5. So that's somewhere up here, 19, somewhere 18.5, 19.5. I actually projected that back in June, I believe. I believe it was in June. So not so much gap stuff that I do, not so much. But again, I'm gonna address that aspect of it. Now, again, here's the charts of yesterday. So, and of course, this is daily chart. We're gonna look at that in just a second. Then we're gonna dive into your gap stuff. I want to make this really brief for you. This the alert yesterday when I put it out. There's that target. They came close to it. They ran down, hit this short target, turned around, and got right under that level and build themselves. Okay, and then came back and support. And then there's the long side target. They hit it. Here's the static levels. You can use them. I mean, you can just use the static levels if you're trying to find targets. And 55 is where they're supposed to go, but you can use the other levels here to, find the cyclical turns, if you will. But 55 is important. That's kind of how you would play that. Now, I don't got a lot of data on that, but don't worry about that. So, but yes, you can absolutely get these templates. Now, let's talk about the the daily. All right, let's just look at this daily diagram real quick, and then we're going to dive into the 1 minute chart and kind of pick apart that gap stuff that you're talking about. Because you can name them all kinds of names, propulsions, whatever terminology that young man is using. Well, older fellow, I believe he's older, right around my age or older. But you could go with his information and do fine because it actually will have this in it, and I'll prove it to you. But it's just what I'm telling you will show up before his gaps. That's all. It'll show up before it. So forecasting, I'm gonna show you how to kind of get in front of that too. So if you want to know where it's going, I'm gonna show you how. Um, you get a move. Now I'm doing it with the arrows here as trends. So you get a move, it pulls back, and then it goes again. Now, typically, if coming from above, because the market's trying to move up, so I did the coming from above scenario. If you ever looked at the word majority, because I do definitions and I like to read the dictionary in Wikipedia, so I like to present definitions when I talk to people. It's really important that we all have the same understanding and not, interpretation. 'Cause interpretation can cause disappointment and frustration amongst a lot of other emotional difficult circumstances that you can subject your mental capacity to, and I don't want that for you. So what I try to do is present definitions for you so you can get a very clear understanding of what it is that I'm giving to you as far as information so you can see it for yourself and build confidence in the logic of it, not something that I'm telling you and you just have to trust me and you don't even know me from nothing. You don't know me. So I want you to trust the information that's on the chart. It's really important that I tell you that. Build a relationship with the information that's on the chart, not me. And so I do welcome, of course, all of the subscribers here, and I've actually come to know quite a few of them here. And I want to say this to all of my subscribers and to those that may come on board. There's only one person here actually on since I've made you futures trading on YouTube. There's only one person here that actually knows me. Now everyone else have come to know me, so I don't know any one of you followers at this point personally outside of having built this channel. Of course come to know some of you since building the channel, but there's only one person that really know me beyond futures trading. Okay, so I'm not paying anyone to leave these comments. That's my point. And so everything here, I want you to have confidence in the chart, the information, and that's what I want to make sure kind of happens here. I want it to grow based on simplicity, what's apparent to us all, not you having to exhaust yourself and in a moment's notice of having to make a decision trading the chart, you're going to have to find it in yourself to believe something that you're not familiar with. And so I wouldn't want that's exhausting, and I don't want that for you. So let's go into this because there's of course things that I can tell you, but needless to say, I want to make it very simple for you. Here's the move. It pulls back and it takes off. All right. Now, from above, the market is trying to force itself down. So if the sellers could get it down, it would go down. It's just that simple. Now, if you go look at the word majority, majority means more than half of the total, more than half of the total. So if you get 50 and one, that's more than half of the total. So what should happen? The majority should win. And of course, if the majority is in the favor of it going in the opposite direction, it's going to have to go. And so then you get this result. Now, this is what I've noticed in all my years of trading. And again, I'm older than that ICT stuff. I've been trading professionally for a very long time. And markets are simple. Any professional trader knows this. It's very simple. And that's why you won't see many professionals online willing to tell you anything that will work over and over and over again and would not stop. Okay. And I would just want to tell you something that's actually, again, is simple and it's going to show up before what's popular will show up. The gaps. It's going to show up before that. So, and again, I have no problem with the ICT approach. If you trading that and you're profiting, keep doing it. You don't even have to worry about watching this video. Just keep doing that, and I wish you well. But what I'm presenting to the public shows up before a box. So that box or that gap, if you will, is late. It's late. It's absolutely late. And so if you're someone that, I mean, you want to protect your capital, because that's our job pretty much at the end of the day, is to mitigate risk. Why would you want to get in something that's already traded, if you will, and you desire to get in against what's happening? The market is proving that it's doing something, and now you want to step in front of it because someone told you that it's a good idea based upon all of these subjective terms, all these subjective terms, and then go the other way. Now again, I'm not saying that it won't work. I believe that, and I said it when I first made this channel, that this price action method is universal. So it would show up in any winning trade. So it will be a part of the ICT gap. It'll be a part of any strategy out there. I don't care what strategy it is. And this is not a strategy, is what, and I made a video about that saying I don't call it a strategy because it's not that. It's not something that I've conjured up and figured out how this should work, and but it's only going to work a limited amount of times. No, it's just the market, and it's just the market alone. I don't name it after myself. I'm not some orchestrator of the candles and getting it. No, I'm not doing none of that stuff. It's unprofessional behavior and it's not right. It's deceptive, and I won't do it. So it's the market. I want you to listen to the market and build your confidence in the market. But majority has decided not to let the market decline. And so, the result of that is getting this midpoint of this candle above this bar's high. Now, if you're able to get more than half of the candle, here we go with majority again, it's a function. If you're able to get more than the majority of the candle above this bar's high, I would say it just might be a high chance that it will keep going. Just that simple. It's a function. It's like you cut on the light, you cut it off. The absence of that function is no longer there. You flipped it upside down on its head. And so now the result of you doing that shows up. And so when it comes to reversal trading, I've touched on this a little bit too on the channel. If I'm telling you that this is the participation to go this way, well, the absence of that, it should kind of, maybe go the other way or not go right then and there and then possibly take off. It's simple. And I'm trying to make sure people can see the chart very simply. Priceless information. Priceless information. And people that have have done this professionally for years, they know it's simple. It's not complicated. You don't need a whole lot of dense rhetoric and you don't need all of that. You just don't need all of that to successfully establish, a legacy. And I want you to think about this, or a fortune, if some people are after just that. You want to be able to do something that you can keep repeating over and over and over again, and that is effortlessly done. So just want you to know that. And so when the market takes back off, if it can get majority above the power bars high, it's doing this again. And so I tell people to read the market like literature. It's really important that you do that. And I teach 4 functions of how to do it. But I want you to know that it's really, really simple. Now, what we're going to do is we're going to take a look at your gaps. We're going to look at your gaps. Let me get a 10-second chart so we can kind of get this done faster here. Now, yesterday's video, I covered this. Time is, important because that's the trend. And we're going to talk about forecasting when it comes to time, how far it can go. We're going to talk about that. But time is a continued sequence of existence events that occur in an apparent irreversible succession from the past through the present and into the future. And so this is your time right here. Everything that deals with how far to go is wrapped up in this right here. So there's chronological significance there that's stated and letting you know that there's an outcome coming. And so here, participation, this is very important because markets are full of participants. And so participation is the action of taking apart something, taking a part in something. The action. Now, destiny is the events that will necessarily, it's a necessity for it to happen to a particular person or thing in the future. It's fate. It's just like someone coming to the channel. I'm trying to get this done through fate. All right. I don't want to intervene in any kind of way and get it to happen in any other way but fate. All right. So thought, action, action. Remember, action. This is us. This is who we are. Thought, action, habit, character, destiny. All right. So it's necessarily happen to a particular person or thing in the future. We choose outcome, but we cannot control it. We trust in its function. All right. And I made the analogy yesterday. You go to work, you trust in the function that you will get paid. You can't control the outcome of it. They can delay your pay if they want. And so the market is the same way as participants. Now, here's the interesting thing about the market. Now, this is the market and how it works. And this is why it's important to simplify trading. You have participants. Okay, let me stay in draw mode here. You have participants that create outcome, opportunity. They create outcome, they create opportunity, and they have designed the function, all right, because it's all about procedural knowledge. All right, it's all about procedural knowledge, and this is what makes for professional trading versus just trading. Procedural knowledge is the knowledge exercised in the performance of some task. Now, procedural, that's the key word, relating to an established or an official way of doing something. So when the doctor operates on you, he's going to do the same operation the same way on anybody that has that same problem. And so when you look at the market, it has participants. And this is what's really interesting because they actually get involved in the very thing that they're creating, and they're creating the outcome. And then they also created the actual function, how it works. If you can wake up, go to work, be a participant of going to work, create the opportunity, the outcome itself, and it also create the function of how much you're going to get paid, oh, you're absolutely winning. Now, here's the thing that makes me say that trading ICT stuff can be a bit complicated. And again, in all respect to the individual's information. Because again, I celebrate anyone that can use his information and get ahead. It's all about just getting ahead. Just get ahead. It doesn't matter as long as you do it. I'm fine with that. I just want you to know it's an official function to it, and you don't want to stand in the way of it. And so when you start losing, even with what I'm telling you, just examine: are you in the way of the function? Are you in the way of how it functions? And so I'm trying to make you aware of a function because they are participants that's involved. They actually create the outcome. They create the opportunity, get involved with it, and then of course the function. They the ones that make the function actually perform and get the outcome to show up. And so let's talk about this zone. And then you can pause the video and if you want rewind it. But a gap should show up here. All right. So a gap is getting ready to show up because this mid, that black floater, put that mid above this bar's high. Now notice my bar turned green. Now here come your box. There we go. So the way I'm teaching you, showing you, I don't know if you're willing to learn from me. The way I'm trying to show you trading, you will be in front of the propulsion gaps, whatever fair value gap, whatever name that individual put on his boxes or his. I just call them boxes. Be the box. Why not? Why not be the box? Don't wait till it come back and then be looking to pick it up and it could keep running against you. Don't do that. Now, when it comes to trend, I just wanted to put that there because it'll form a lot faster here on this 10-second chart than it will show up on a 1 minute. Now, let's talk about trend. So, forecasting, where it should go, is what I'm interpreting from your information there by saying forecasting. All right, so it's really simple. Let's start with 9:30. Let's start with 9:30. Where's 9:30 at? Let's start with 9:30 so you can see this information, my friend. I hope that I'm making myself very clear about what it is that I'm offering here on the channel. It's really important. So yeah, let's do that. It's really important that you know and anyone else that comes to the channel that you are absolutely aware of what we're trying to do here. We are a community that want you to understand trading in a very professional manner. That's number one. We want to make sure that you show a level of politeness. I don't know if if you're I don't know interested actually in knowing what it is that I'm expressing on the channel, or you may just be I don't know. But we're going to get to the bottom of it. We're going to figure it out. But what I want you to do, that's 9:30. Everybody is all over themselves about 9:30. All right, so now let's go here. That wasn't even a downtrend. I want to find where it was downtrending, and then I want to find where this one, two, three. That's not a downtrend. At least it don't appear to be. One, two, three, four, five, six. Yeah, that's a downtrend. All right, so I want to find where it's downtrend, and then had a change of direction. So we had a downtrend here. All right, so one, two, three. That's four. One, two, three. Okay, that's four, five, six, and seven. All right, so seven. All right, now that failed, and they actually wanted to go back up. So now we're going to go one, two, three, four, five, six, and here's seven. So you need to get seven higher or lower for that matter than the prior. Okay, and you ignore everything else in between. All right, so we go seven down. Okay, so this is our seven down. Okay, and this is our seven back up. All right. Now, fortunately, you can see that the seventh bar actually just blew that high. Now, because this seven here, you would project it off the COT, which is the center of that trend. Okay. Or you can go off the seventh bar itself, either which one. You go to either which one, and that's your forecast. So it goes seven, you go off the center of that seven, or you go off the seven bar itself. Because remember, the markets was created with a thought. It was created with thought. It was created by some mind. There was a mind involved. It made an action, did it more than once, and then of course was defined, and then you have outcome. All right. And now the market is working just like that, but it has morphed into something far more sophisticated. The individual is involved, creating the opportunity and design how it's supposed to work. And so they're always privy to this information all the time. And it's actually really simple, because why would they create something complicated for themselves if they're going to get involved? That don't make sense. And so it would make the most sense for us to become aware of the participants' mind, of how they think. How is it that they think? It can't be all of this dense rhetoric that's online that's causing people to, of course, think that it needs to be complicated. It's not. Why would this participant, the individual, or individuals for that matter, come together and say, hey, let's make a model that's hard to trade, difficult for us to understand. And yes, we're going to absolutely be able to secure our legacy and take care of our family with fortunes. I mean, with billions of dollars, and definitely even their children, billions of dollars moving forward. That don't even pass the sound test. And so it's really important that we slow it down. The center of that trend, they can go off the center of the trend. If so, they were already working on it. You got to see them kind of working on that, if you can, to forecast where it should go, or just go off the trend bar once it's set. They lean right back into the center of that trend. Almost got there first. And then, of course, they just kept repeating that same process. And this one actually did it right on the turn. Like no sooner it came back up, it had made a distance. But now you're dealing with volatility. Well, not yet. Not yet. I believe that was the news. So the news was somewhere around there. But now 9:30 coming, it pulls back. So let's take a look at this. All right. So the 9:30 come in, they pushed down, but then they ran up. Okay. So they ran up, they stopped about right here first. So they stopped right here first. All right. So they ran up, turned around. Okay. Now if they're going to go up now, do keep in mind there's ways to read the information, but I'll tell you this. I'll tell you this because we doing this on the channel anyway. This bar's mid is not above this bar's high. That's why this bar is not green. That's why this bar is not green. Now, you may say, well, this gap, turned it around. Yeah, you can go at it like that if you want. They had a gap down here. It didn't turn around. So I say just listen to what's happening. So if right now this mid is not above this bar's high, it may not have the participation to go ahead and go. So you may want to wait a minute. You might just want to hold on until they come back. You had some boxes, several of them actually on the way down here. You had several of them, but now you're seeing the participation come back in it. Okay. This bar's mid is above this bar's high. And yes, that is a downtrend. Respectfully, it is. I know we got our seven somewhere in here. Hold on. Let's see. One, two, three, four, five, six, and that's seven. So somewhere in there. Yeah, right there. But they didn't want to go. They just didn't want to go that far. They just didn't. So it failed. Now that's something I can tell you about how to know where to fail too. They turned back around. And so the participation, and this is something I definitely stress on the channel, the sooner it show up, because this is the real participation. Remember, the participants created the outcome and they designed its function. That mid is above this bar's high. There's a chance that they can go up there. This mid, okay, is above the bar's high. This bar's high, it's above it. They can go. That's important. Really important. Now, your box here is coming in after this bar is finished. That's when it's coming in. This bar turns green the moment that this bar finished, this green one finished, and this bar turns green and say, hey, this is a problem. I argue that you need to be in it the moment that you see this mid clearing the high of this bar. That's function. No fancy language, no none of that stuff. And of course let me talk to you about that volatility push that they did off of 930. You see? Now you start applying that information there. Apply that information there. That's important. Absolutely important. Now, at some point, yeah, they got to do it again. They're gonna have to, stop the market to go the other way, kind of pull that same stunt. Got to pull that same stunt. So I just want to make sure that you are fully aware of what it is that I promote here. I am promoting what makes sense and is sensible. It's not far fetched. It's not full of a lot of rhetoric that is hard to understand. It's all about function to me. Who's involved? What's inevitable, what's their overall objective, what do they really want to happen when they made this market, what do they want to happen, or when they make that trend, what do they want to happen? And oftentimes, I don't know if you're different, but I believe you work this way. Your thought actually have in it where you want to be. And so when you listen to the market and you listen to the trend, so if they set the trend, that's like having the thought. So the destiny, if you will, okay, the events that will necessarily happen to a particular person or thing in the future, fate is actually here, right inside of your thought. Your outcome is actually where it started itself. I wish you all the best with your trading. Take care.